Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me for this session, we have Mike Cahill, CEO of Douro Labs, core contributor to the Pyth Network, Antonio Juliano, founder and CEO of dYdX Trading, and Robinson Burkey, co-founder of the Wormhole Foundation. We're here to discuss the future of on-chain and infrastructure for the next financial era. It is great to have all of you guys with us. Welcome to Trade Talks. Mike, let's kick it off with you. Give us a brief intro in terms of where your company sits in the infrastructure ecosystem.
Sure, cool. Excited to be here, Jill. So Douro Labs is building the Pyth network, and Pyth is what you could refer to in DeFi as an oracle. And so it is our job to bring data from outside of blockchains on-chain in a trustworthy way, and we do so as fast as possible. And the area of data that we focus on is real-time market data. So it could be the price of crypto assets, could be the price of equities, FX, et cetera. And so people build applications using that data.
And Antonio, if you could tell us more about dYdX.
Absolutely. So dYdX is one of the leaders in DeFi plus derivatives trading. So it's more targeted at professional traders, and derivatives have really become the primary way that crypto is traded. And we were the first to bring that to DeFi over 7 years ago.
Right. And finally, Wormhole Foundation. What's your role within the space?
Yeah, absolutely. So Wormhole is what we call an interoperability protocol within DeFi, and Wormhole connects blockchains so that assets like stablecoins or institutional funds can move between blockchains. Apps like Uniswap can send governance messages and data between different chains. Users can stay connected across all blockchains, and institutions like BlackRock can take advantage of all the blockchains and not just stay siloed to one.
So, Robinson, when we think about moving market infrastructure forward, what are the problems? What are some of the issues that DeFi is looking to solve?
Yeah, there's a number of them. So number one, we have centralization and trust issues, right? So DeFi is aiming to eliminate some of these intermediaries like banks and brokers by using smart contracts and different blockchain technology. There's a push for more financial inclusion with DeFi, right? TradFi often excludes people because of things like high fees, credit requirements, maybe investment minimums, or geographic limitations. Transparency, right? Blockchains ensure that all transactions are publicly verifiable, which can help reduce corruption, different hidden risks. I mean, these three are enough to build a new financial industry on, but there's others, right? There's 24/7 markets, censorship resistance with these decentralized networks, and of course the cost reduction, I think, is a big one, right? Eliminating these middlemen, automating the processes or different processes, all with smart contracts, et cetera.
Right. So, Antonio, when you think about derivatives trading, what are some of the challenges and issues that you're looking to solve when it comes to advancing this type of investment moving forward as infrastructure evolves?
So following up on that answer, I really think it's a lot about access and just making finance available to more people in more places and fundamentally changing the way that finance works, where it's not just run through intermediaries, it's run through the users. So the users can use the software to own the platform that they're using to trade or do other financial activities. The other thing that excites me about DeFi is that there's just so many new types of things that you can do with DeFi. Like you can create new assets on dYdX. Anybody can come and create a new derivatives contract, and it's not just limited to a more exclusive set of financial participants.
Mm-hmm. And Mike, you had mentioned that data is really key when it comes to what you're doing with your firm. And of course, data is the commodity these days. So what are you looking to solve for?
The mission of the Pyth network is to really bring the price of everything and make it available everywhere. And so if you think about the global landscape for financial market data, it's pretty fragmented. You can go to Nasdaq for a whole lot of stuff, but then you also have to go to CME and ICE for other things. What's cool about the network is it's able to tap into a set of institutions who publish their data directly. And that means it's very, very easy to be kind of asset agnostic. So there's over 1,000 instruments that are made available on the network. About 50% of them are US equities, but there's lots of crypto and FX and rates. And so our true objective is to just keep expanding that and making it so that what Antonio said, that applications are able to get access to greater parts of the world and expand the scope of what they're able to offer to people, and just create better financial freedom and literacy around the world.
Right. So, Mike, you had mentioned that it could offer less fragmentation. Do you run into risk if there is all of that data just on one network?
Yeah, so this is where the beauty of the blockchain comes in. So decentralization is core to the backbone of the Pyth network. There's 120 publishers, and they're doing so to a blockchain called PythNet. And so PythNet's sort of a cousin to Solana. It created a network that is fully auditable using the same tools that use on Solana, and it has those same kind of security guarantees. So at any given point, you've got up to 120 different publishers who are creating these prices. That means that they're sort of they're very difficult to manipulate or to collude against because you've got this kind of superset of these institutions. Further to that, you actually have this economic security. So Oracle integrity staking means that all the publishers stake Pyth tokens. In the event that the Pyth network price is wrong, they would be eligible to be slashed. So it really takes the best of what blockchains have and create that trusted system as opposed to trusted person.
Yeah, which is interesting because Robinson, we just had Solana on the show last week or the week before with a number of the projects that are represented on that network, and security and interoperability were two key issues. Not issues, but the improvement of that, particularly with interoperability, is what's really helping to advance institutional adoption and the merging of TradFi and DeFi. And I know interoperability is core to what you do. Tell me more about that.
Yeah, absolutely. I think maybe taking a quick step back, there's this term that's kind of emerging, and it's similar to when like online became a thing. But for the crypto industry, it's obviously on chain. However, the problem is today we actually have a lot of different blockchains. So on chain usually means one, not all of them. And so, but when we talk to these institutional providers, of course they want to take advantage of everything like blockchain technology can offer. So whether it's 24/7 markets, transparency, fractionalization, reduce fees, the list goes on. But they also want to tap into the growing market of users and liquidity across all of the blockchains, not just one. And so, for context, today, Wormhole leads the industry in providing interoperability solutions for fund managers like Apollo and BlackRock. And one of the main things we focus on is enabling these institutions or these funds that are tokenized on chain to tap into the entire on-chain market. Of course, they want to access Solana, but they also want to access Ethereum, Aptos, Arbitrum. And so we see interoperability as this kind of key unlock in accelerating the adoption of blockchain technology for traditional finance. And we've moved on from simply just kind of announcing things in this space in the intent to see institutions come on chain to actually these funds moving between blockchains. I even remember just about 6 months ago or a little less, seeing someone sending over a Block Explorer link and seeing actually BUIDL, which is BlackRock's money market fund that's tokenized on chain, moving across chain via Wormhole. And so the concept is quite simple. It's just we want these institutions, any sort of asset issuer, quite frankly, not just institutions, they want to access all the blockchains. They want all to tap into all the users, all the liquidity, and interoperability helps solve that.
Right. And Antonio, let's talk about instant market listings. Tell me more about that concept.
So it's really following up on this concept that Michael's been talking about, where if you can have an Oracle source, meaning a price feed on anything, well, dYdX takes that one step farther and just allows you to trade effectively anything that you can have a price source for. And with instant market listings, it follows up on this general theme of allowing the users to control the platform. It's any user can come to dYdX, can list any asset that they want to trade, and it's not up to us or anyone else. And that's really been the killer feature that we've seen push a lot of adoption for DeFi all the way back in 2020 with Uniswap. It's like anybody could come list anything with spot trading there to Pump.Fund today. Now there's hundreds of thousands of assets being added every day. And we feel like trading derivatives that anyone wants to trade through dYdX with instant market listings is the culmination of that.
So is that akin to an IPO as an example, if you want to list stock, but in a different way of obtaining capital formation or sourcing liquidity?
It's somewhat similar to that, just in the sense that it's a new listing, but it's different because it's a derivative contract. So this asset is likely traded somewhere else through the spot market, but then you can come to dYdX and trade it with leverage, trade all types of different things from prediction markets all the way to crypto assets, to commodities, et cetera, through dYdX on a derivative contract.
So Antonio, tell me more about how you're working with the US government to advocate for DeFi's future in the US moving forward.
So this has been something we focused on for a long time at dYdX. Again, dYdX has been an OG in DeFi, been around for over 7 years at this point. We've had a lot of different conversations with various regulatory agencies, including the CFTC, just advocating and educating on what DeFi is. And it's just fundamentally very different from what the traditional financial system offers. And all of the regulation more or less focuses around regulating intermediaries. And again, with DeFi, it's different because you're regulating software. And we've just been a good force for advocacy alongside of a lot of others like Uniswap, et cetera. And we do feel like there's been quite a lot of progress made, especially recently with the new administration, and find that very exciting.
Yeah. Mike, when you think about this trend of bringing everything on chain, when you think about RWAs and tokenization and so forth, it seems as if this is the path forward in terms of the global capital markets, and to the point where this is going to be the pool where you're sourcing liquidity. What's the time frame for that? Do you agree with what I'm saying? What do you think that looks like?
I agree with what you're saying, and I think the best way to contextualize it is it's to fix the capital markets for people outside of the US, because in the US you've got pretty good capital markets. If you were to like superimpose the percentage of ownership of Bitcoin versus shares of Microsoft, you'll start to see where the problems really exist. And so like Argentina and Nigeria are disproportionately high in their ownership of Bitcoin, mostly because they don't have access. And that could be because there's a regulatory reason why they've clamped down on this, but it also could be that, your average person doesn't have the ease of access or the financial literacy to be able to invest in something that's more of a suitable asset class for them or a diversified asset class for them. And I think that happens. And I think it happens in the way that Antonio mentioned, which is it's easiest to do via derivative contracts. RWAs and what Robinson was talking about is like the way that you actually stitch this all together. So that's like the kind of bringing the heft behind, an issuer who from the IPO level wants to take access to this global market. Whereas what Antonio is describing and what Pyth enables is the ability for those people to participate without having to have this RWA narrative kind of play out first. And so the two of them are important together. It's, your classic spot versus derivatives. And I think it's happening, relatively fast. So if you were to take the one asset that like crypto should be good at, it's crypto. And so the percentage that's traded on chain versus off chain continues to go up. And I think the numbers for January was like for spot, we saw something like 25%. Obviously, a lot of that has to do with the fact that most of the meme coins are not tradable on exchanges, and they were initially traded on, Pump Fund and then Solana. But on derivatives, it was 12 to 13%. And like that's up from, I think, a high of about like 5 or 6% the year prior. So like these numbers are certainly taking place, and we're seeing this all play out. What we'll eventually see is what does that then look like for FX, or what does that look like for rates and equities and things like that. And I think that those are going to be the fast follows.
Yeah. Robinson, I would also argue that from the US-centric or Western-centric perspective, we think of digital assets, Bitcoin, as a store of value, a hedge, how it's trading, and so forth. But to Mike's point, there are a couple billion people around the world that leverage this kind of technology for alternative forms of capital formation, e-commerce, cross-border payments, and so forth. So this is already in the economy in many parts of the world. And this underlying infrastructure, it's necessary for the advancement of that. It's not just about how meme coins and Bitcoin and so forth are trading. It's the underlying infrastructure that I think is a story here.
Yeah, absolutely. And I think that brings more of a magnified focus to what's important, right? As more people rely on these systems for all the various benefits we've already talked about, Mike's mentioned a few, Antonio's mentioned a few, security becomes even more important. And so we focus a lot on security. If you think about all the different blockchains that people are using, I know for specifically Tron has a ton of USDT volume. That comes a lot from LATAM, a lot from different countries in Africa. And so the ability to make sure that all these blockchains, they're using Tron, others are using Solana, others using Ethereum, are securely connected becomes extremely important, right? And it's almost synonymous to thinking about the banking system today and how there's almost this kind of agreed upon standard with Swift. And I think this is a really good example because you're able to then have this fungible way in which you can connect all these different blockchains, and you can easily, or banks in this case, but blockchains in our case, and you can send these assets between all these different blockchains. So you don't actually have to introduce an additional layer of complexity to all the adoption you're looking for. So that's that is the case for, these emerging markets, but also the case for these institutions. What in this ultimately, I guess you can see this happening when you look at, and there's actually a pretty famous, or at least in the crypto world, famous picture of a wallet with about 6 different USDCs, right? They're not fungible, they don't work with one another. And that's a core problem that interoperability solves, and we need to make sure we solve for anyone that's using these systems across the world. And so we are today, and it is becoming more and more, interoperability in particular is becoming more and more of a, I would say, important infrastructure as more and more blockchains get created. And there are blockchains getting created weekly still, believe it or not.
Yeah. So, Antonio, when you think about this moving forward in terms of your outlook, is the next catalyst getting the regulatory framework around it in the US and seeing, I know we're talking about it now and what policy could look like, but it's really going to be how you execute on that. Is that the next big catalyst to bring this, ecosystem to the next level?
To some extent, but I am really excited about all of the progress, even that's been happening with regulatory just in the past few weeks. It's changing quite a lot, and I'm excited now to build a crypto company in the US. I really think that the next chapter for crypto is going to be shifting the focus from infrastructure to end user applications. Not that infrastructure is not going to be important. It absolutely is. That's the backbone of everything that we're building here. But now the infrastructure is getting good enough where you can actually create really world-class types of applications that are fundamentally different and allow you to do things that you could never do before. And that's the really exciting part. Like that's what we should be talking about. It's what products are we creating? How are they affecting users' lives? And that's what I'm excited to go out and take a stab at with dYdX.
Yeah, and Mike, to wrap up here with you, and I would echo what Antonio is saying in this. We've noticed this around global coverage that we provide, going to different conferences and meeting with different regulators and policymakers. We're now thinking about integration and what that looks like and the ease of use. It's all down to user experience and familiarity. You just want to get from A to B and have it seamless and work and be compliant. What are your thoughts in terms of moving forward?
I think you're right. I think that like when we've got a killer app for crypto, it's not going to be something that people think about using as their wallet or think about it as a better version of Uniswap. It's going to be, oh, that global Robinhood thing that everybody uses. And they're not going to know that it's powered by crypto or blockchain at all. It's going to be completely, it's going to feel as if they were on a Web2 application and you're just going to get all the benefits. And like to just push on Antonio's point, it is totally the case that the infrastructure just needs to keep improving. And we're not quite there yet. We're getting very, very close. But like once you got really good infrastructure, then everything starts to really click. And like this has always been the case with like the internet. Like if you tried to do online shopping in the 90s, you didn't know why it wasn't great. But then like 10 years later, when everything was just much faster, you're like, you know what? I sort of get it now. Like we're getting much, much closer to that I sort of get it point. And I think we're going to get there much faster as we're seeing faster blockchains, like lower block times, higher throughput, starting to push the boundaries to make a seamless Web2 style experience feel possible.
So it's almost like when you get direct deposit, you don't even think about it anymore.
You don't think about it.
I mean, I'm old enough to remember when we used to get the physical checks, you have to go cash it at the bank or deposit into your account. You don't even think about direct deposit anymore, or even aware of the technology when you're signing up for, whatever to transfer money around.
Exactly right. Yeah. Whenever you put yourself forward and you think about